Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Historically, the final stretch for September through to December has always been considered one of the most action-packed and profitable periods of the year for commodity traders. And so far that trend, it's definitely living up to expectations. As we move through the second half of 2022, rapidly surging global inflation, rate hikes and recession risk, they have now become three of the biggest and most explosive market-moving themes of the current financial climate that we find ourselves in right now. The great news is that this trend is set to continue and will no doubt remain the center of attention throughout the final stretch of the year. These markets, they're a trader's paradise packed with an endless flow of back-to-back profitable trading opportunities. In fact, making money in these markets has never been so easy. There is no denying that the central banks across the world, they have fallen way behind the curve in tackling inflation and now find themselves pressured into high-stakes race, desperately trying to raise rates too fast, too late, inevitably risking an overshoot that pushes the global economy into a recession. In July, the European Central Bank, they joined the global rate hike club by delivering its first interest rate hike since 2011. And they definitely did it in style by surprising the markets with a larger than expected 50 basis point hike in an attempt to play catch up with the rest of its peers. A week later, the US Federal Reserve, they raised rates by another supersized 75 basis points for the second month in a row, verging on its most aggressive cycle of monetary tightening since 1981. Shortly after that, the Bank of England, they followed in the European Central Bank's footsteps and the Federal Reserve's aggressive footsteps by unleashing its first supersized interest rate hike since 1995. Fast forward to September, and we're now on the verge again of another big month for central bank rate hikes. This week, the European Central Bank, they are expected to hike interest rates sharply after inflation hit a record high in August. Eurozone inflation rose 9.1% in August, up from 8.9% in July and above the 9% forecast. This means inflation, as is the case of Western economies right now, is well ahead of the central bank's 2% target, driven by soaring energy prices. Eurozone inflation could enter double digits as early as next month, which could force the European Central Bank to respond with a supersized 75 basis point rate hike next week. In fact, those odds hardened recently after natural gas prices on both sides of the Atlantic blasted through all-time record highs, signaling again that inflation is likely to remain entrenched for the foreseeable future. Natural gas prices, they're currently 11 times higher than they were usually for this time of year, and we haven't even entered the winter months yet, when prices will inevitably soar much higher. Also on the radar this week will be the hotly anticipated speech by Fed Chair Jerome Powell at the Cato Institute Monetary Policy Conference. This will be his first speaking appearance since the Jackson Hole Symposium, which sparked a massive 4-day stock market sell-off. Powell's every comment will be closely scrutinized for fresh clues on the size of the Fed's next interest rate hike this month, which, as we know, always has the potential to move the markets massively. Elsewhere this week, all eyes will be on the OPEC meeting and its allies as they meet to decide whether or not to raise oil output. Extraordinary times, they do create extraordinary opportunities. Right now, as traders, we are living in some of the most exciting and rewarding times ever in history. Banks, hedge funds, they're making multi-billions capitalizing on the week-to-week macro-driven opportunities, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, using our proprietary research-driven trading approach, have already made in excess of 6 and 7 figures so far this year, and we still have another 4 months left to go. If you've been kicking yourself for missing out on some of the biggest trading events so far this year, and you still want to make 2022 your best year yet, then you still have time. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So firstly, moving over to gold, as we talked you through on both Gold Asset of the Day and the Commodity Report later on in the week, we've been waiting very patiently for prices to break all the way back down here, back towards 1700 or lower. This is in fact where we have sniped into positions on Thursday through to Friday on gold, getting into gold sub 1700, and with that we've had a nice breakout to the upside following on from Friday's non-farm payroll. With gold prices, they broke back out to $17.16 per ounce, closing just under $17.12 per ounce, which puts our 3 new positions up really nicely nicely on gold into Friday's close. Not only that, we've also capitalized on silver as well, as we saw silver prices break all the way down towards that 1760 level there on Thursday through to Friday. We also sniped in a position which is now nicely in profit into Friday's close, and platinum as well. We've also taken the opportunity here as it's broken all the way back down towards the swing lows to sniper in and add another position on this market too. It's worth noting that both with silver and platinum in the last week, we've finally seen commercials. They've now flipped net long on platinum and silver. It's the third time in 20 years that this has occurred. So you've now got the hedgers, which typically hedge their position in the opposite direction because they are producers essentially of platinum and silver. They have now flipped their overall position to go net long, which is very rare. So this does typically see a rally in the coming months afterwards. Silver historically, once commercials have flipped into net long, we've seen 20% rallies in the coming months afterwards. So this is definitely worthwhile having on the radar right now. Then as we go into next week as well, again, we have a public holiday in the USA on Monday for Labor Day. And then as we move into next week, the real big news item that will be the main focus will be Thursday's European Central Bank announcement, and also comments from Jerome Powell next week as well. Thursday's European Central Bank announcement, again, that could cause massive volatility in the commodity markets where you can capitalize on that. Again, I like to bank into strength when we do get these breakouts to the upside, and when we have a lot of fear in the market as we have right now, where we've broken all the way back down towards swing lows and multi-year and multi-month lows on the metals. These are typically some of the best times to sniper in and build into positions very quickly. As we mentioned with you on gold here, we were taking profit after the CPI data where gold broke above 1800. Over 2 trades, we banked 2,000 points profit. We then went long the dollar after that CPI data, and the dollar index ended up having its strongest week since April of 2020. We hit 385 points profit on the dollar at the 109 level. So very fast profits on that market. Waited for gold to break all the way back down towards the swing lows to get sub 1700. Then we've sniped into this market alongside silver and alongside platinum as well. So it's been absolutely fantastic to again capitalize on this range bound price action. It's exactly what we talked you through the previous week as well. Commodities at the moment, easily week to week, they're moving within 1,000-point ranges. Look at the opportunities that you've had here yet again on oil. So the week beforehand, we talked you through opportunities to be buying in at the swing lows, which is what we did. We capitalized on 1,200-point breakout over 3 trades on Brent crude oil the previous week. So we've had that slingshot move higher. Then just within 3 sessions, you've yet again seen another range bound move all the way back down towards the lower end of the channel. 1,000-point sell off to the downside, yet again giving you an opportunity to just trade the range that we have here on oil week to week. This market easily moves 1,000 points at the moment. There's been plenty of opportunities to just keep coming in and out of this market. So I absolutely love this market for range trading at the moment. So again, Brent crude oil, we're right at the lower end of the ranges here, back towards 92 US dollars per barrel. We do have an OPEC meeting on Monday, so expect further volatility off the back of that. So far, the playbook here has just been to keep capitalizing on this range bound price action, buying at the swing lows, and then essentially capitalizing and banking profits quickly into strength as we get anywhere between a 400 to 1,000 point breakout to the upside. That's been the playbook for a while now, and that's played out extremely well. It's also, of course, relevant to crude oil as well. We're looking at Brent there, but crude oil is right now trading back down towards the swing lows around $85 per barrel. Each time we've seen $85 per barrel get retested, that's offered multiple opportunities to sniper in as well over the last month. Over the month of August, that has been a fantastic way to capitalize on this volatility. We also have the dollar index, which is closing near to limit up on Friday here, so it's closing near towards the 20-year highs yet again here. As I mentioned previously, we hit our profit target outright at the 109 level, banked 385 points within just a week and a half after going long from the CPI data in the month of August. That's been a great market to capitalize on as well recently, just to hit that profit target outright. Now we're struggling a little bit around the 109.55 level. Again, I expect next week that the major catalyst for the next big move here on commodities and also currencies as well, especially the metals and the dollar, will be the European Central Bank announcement next week on Thursday. The week after that, you've also got the Bank of England, which are expected to go ahead with a supersized rate hike as well. So again, there's just tremendous opportunities to capitalize on right now across the board with both energies and also the metals here. So I do hope that many of you have been able to capitalize on this and yet again book a windfall amount of profit. We are seeing one of the greatest wealth transfers ever in history in this new era of economic change, that we find ourselves in right now, with rapidly surging global inflation, the cost of living rising, energy, gas, and food bills all soaring, it's once again an important reminder that you can't just rely on one income stream. If your goal is financial freedom, then you need to start building multiple streams of income. The importance of having an essential income generating skill like trading, it's no longer a luxury, it's now a must-have necessity. In the words of Warren Buffett, the best investment you can make is in yourself. You can never lose when you invest in yourself and when you invest in new skills. If you want to upgrade your income, then you need to upgrade your skills, and there is no better skill than trading. If you want to maximize your money-making potential and thrive, not just survive in these highly macro-driven markets, then you need to adapt your strategy so that you can grow your income to massive levels. If you want to gain that ultimate edge to supercharge your wealth in these highly profitable markets, then you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. Having access to the right data at the right time, it is the single greatest difference between ordinary and extraordinary results. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. Trading like every other misguided retail trader out there, using outdated technical analysis and gimmicky technical indicators, that will not work. We're no longer in the 1980s, we're in 2022 and the age of data. Every industry right now, including trading and the investing landscape, is being disrupted by data. In this day and age, if all you're doing is relying on outdated technical analysis or gimmicky technical indicators, then you are guaranteed to get crushed and chopped up in these markets when every other well-informed and well-educated trader out there is creating life-changing wealth. If you want to change your results, then you have to change your thinking. Never underestimate what you can achieve in the next few months from now with the right skills, knowledge, and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.